please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV 18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a session where we're not that impacted, it seems, or we're not reacting too badly to what's happened with US, China and the tariffs kicking in. So if you look at the Asian markets, that too is quite mixed, except for the Chinese markets, which have been underperforming on the trot. So barring that, we have stocks such as the markets such as the Japanese markets, etc., which have gained, and even Shanghai, which has actually moved into the green. So that too is something that you should take note of. Separately, the Nifty is just about hovering at around 10,800. Week to date, the Nifty has gained around 0.7%. And compare this to the MSCI Asia ex Japan, it's outperformed compared to that index, which is down 2% for the week. A lot of stocks in focus: Tata Motors, Ashok Leyland, Glenmark, a couple just to name, and we'll be discussing all of them through the next 1 hour. Hi, Prashant.
Ekta, hi. So we're still waiting, by the way, what China has to say about it, right? I mean, they said that they will retaliate, which is nothing new. They've said this earlier as well. But what will be the retaliation? I mean, I think markets are expecting some specifics through the course of the day. So I think that would be, to some degree, impactful whenever that happens. I mean, could be during the course of the market hours here, could be later. We don't know that. But 10,800 on the Nifty, 0.5% higher. By the way, I mean, as we were pointing out yesterday, Asian markets in particular have seen a fair bit of weakness through the course of this week and the week before, be it Nikkei, be it the Shanghai Composite, be it the Hang Seng. So, I mean, I saw an alert at the bottom of the screen that the Hang Seng, for example, has seen a pretty large rebound, 480 points off the lows, but it has also been a market which actually got beaten down quite a bit. Have to put that in perspective. So particularly, I mean, you look at Europe, you look at US, and you look at Asia. Asia has been exhibiting the maximum signs of weakness. Some markets have broken through important key levels. So, I mean, rebounds, whenever they happen, are just par for the course. We'll continue to track that closely. Let's bring in our guests, and as always, we begin the show by laying out some trades for you. I mean, both on the cash market and the futures and options side. Krish Subramaniam is with Altamount Capital. He's with us. Krish, good morning. I mean, what would you do with the Nifty, if anything at all, and what stocks would you trade?
Morning, Prashant. I think that the trend definitely seems to indicate that odds are high that we should break past that 10,830, which has proved to be a bit of a resistance level. So I'm giving a covered call given the volatility that we have seen this week. One could possibly buy the Nifty futures and also correspondingly sell a 10,900 strike call. That should be trading at around 60-70. Keeping a modest target of 10,860 and one could keep a stop loss of 10,725. And but the odds are high that if we do close above 10,831, odds are high that probably we will march towards 10,900. And stock specific, I've chosen a couple of stocks which have shown some pretty bullish biases in the last, I think, 2-3 months, even in the overall stock sell-off. The number one stock is M&M, which of course trading a bit soft today, but I think one of the better placed technically the auto stocks, and we also seen some decent put trading at lower levels. So one could possibly buy a 900 strike call that's quoting it around 20 to 23, keeping a target of 45, and maybe one could keep a stop loss of 10. And the second one is Gas Authority of India, very interestingly poised. I think we could see some very good breakout coming about here. Giving a covered call here, one could possibly buy the futures and sell a 360 strike call, keeping a target of 365, and maybe one could keep a stop loss of 340.
Okay, all right, Krish, we're going to let you go on that note. Thanks very much for joining in and taking us through all of those strategies. We have Mitesh Thakkar joining in on the phone to discuss what his stock calls as well as his index calls would be. Mitesh, hi, morning, over to you then. What are you recommending on the Nifty, which is at 10,800, as well as specific stocks?
Good morning, Ekta. We've been looking at Nifty range of about 10,830, 850 on the upside, and we are very close to that. So I think we would advise, even on stock side, we would advise taking some positions off on the long side and tightening your stop losses on the if you're holding on to long positions. We still are not attempting short, but I think, if we fail to see strength around 10,830, 10,850, then it might be a wise idea to take a short with a 25-30 point stop about 10,850 and look for a 10,750 as your first and primary target.
Okay. What would your stocks be, Mitesh?
Yeah, I do like Marico. I think that's had a good week as yet, and I think this momentum should follow on through the next week. Buy with a stop at 338 here and look for targets in the range of 360 to about 365. And Cement Pack in the last 2-3 days has seen a good rebound from oversold levels, and Dalmia Bharat joined the signal yesterday, gave a buy signal yesterday. So that's a buy with a stop at 23.10 and look for targets close to about 24.30.
Okay, Mitesh, what would your recommendation be on a couple of these auto stocks in specific, say something like a Tata Motors, which is bouncing back from the from the Nifty space? I know it's seen a huge amount of a decline, but nonetheless, and even something like a Hero MotoCorp, which is up 2.3%, and from the broader markets, and Ashok Leyland.
In fact, I like all of them, and Prashant, it happens that Tata Motors, you've discussed many times, it kind of broke that support of 260 yesterday, went down but managed to kind of climb up and close just above it. Also, the fact is filled the gap yesterday. The intraday reversal will happen if we see the stock get past these levels of 272, and then it can head towards 285, 290. And I'd like Hero Motors. I think the stock is heading towards 3,700. It's made a very strong base around 3430, 3420, and an up move has clearly started here.
Okay, I mean, Tata Motors, keep an eye. I mean, it's fallen quite a bit. It touched an important level as we've been discussing, and it's rebounding. And Mitesh says there might be more to go. Mitesh, thank you very much. We will speak again. Appreciate your time. So the big story from a global perspective has been the fact that U.S. tariffs on $34 billion worth of Chinese imports have gone into effect. I mean, another $16 billion will go into effect later. So that's total of $50 billion or so. Overnight, by the way, there's also already been talk that there's another $200 billion worth of products, Chinese imports on which tariffs could be imposed. That has been kept in abeyance. And then on top of that, there was talk of, another $300 billion or so. So we're basically talking, I mean, President Trump yesterday at an event said, well, the total could be as large as $500 billion. Now, one doesn't know how serious it was and that comment was, but this one, the $50 billion is going into effect. 34 has already gone live. Reuters, by the way, is reporting, I mean, as we speak, that some Chinese ports are delaying clearing goods from the United States. This is a source-based story that Reuters has put out. So, there is no official communique in terms of what measures they will take, but apparently some Chinese ports, according to Reuters, are delaying clearance for goods coming in from the U.S. We've got Jeff Lewis joining in right now to talk about this right now. He's Global Strategist, Capital Markets Group at Manulife Asset Management. Jeff, thanks very much for your time. Your thoughts on this? Will we see specific announcements from China, essentially retaliatory measures?
Well, I think that the Chinese have already made it clear that they will match the U.S. step by step, but not in an aggressive manner. So they will come out with tariffs on an equivalent $34 billion and go to the 50 when the U.S. goes to the 50. The emulation and retaliation, this is what always happens in a tariff war. You just have to look through history. The other side does not turn the other cheek. Who would expect them to? Now, it's very sad, I think, that we've come to this when there seemed to be the basis for an agreement after the talks in Beijing and Washington, and then somehow that didn't seem to suit the U.S., and it's back to the drawing board. So there's not going to be any big noticeable macro impact from these tariffs. They are far, far too small, and most of the macro models suggest the impact on China GDP will be 0.1%, 0.2% at the most of 2019 growth. But of course, the problem is tit for tat usually can carry on. And so it's very much going to be up to President Donald Trump, I think, whether there are further rounds of tariff measures imposed.
Okay. Jeff, we were speaking to an expert earlier on in the morning, and he was of the opinion that the best way to play these trade tariffs, which might even escalate now, there is that threat of escalation always, is to look at local companies which are primarily focused on domestic manufacturing and the domestic market, which could be across equity markets globally. Would you share that opinion as well?
Well, I think some of the best opportunities are in domestically driven sectors and industries in large emerging market economies like China or India. So I think that is a space where we are overweight in our portfolios at Manulife Asset Management. So yes, I would agree with that. We have seen global trade on the back foot over the last few years, growing more slowly until last year than industrial production or GDP. And it seems that global supply chains, in a sense, have reached their maximum. So these tariffs are certainly not helping that. And they're coming at a time when I think the statistical evidence points to a slowdown in world trade from its peak in the last quarter of last year.
Jeff, just one last point. In previous periods when we've had these trade skirmishes, I was reading that the dollar comes under pressure. Now, for emerging markets, the dollar under pressure isn't bad news, but the only problem is the dollar is under pressure against the G10 currencies. I mean, it doesn't really sell off against emerging market currencies. It goes the other way. Do you have any research on this, or I mean, have you looked at how this would pan out? For example, India doesn't have very much to do in terms of how it could get impacted with trade wars, etc. Potential impact could be collateral via the dollar or commodities, etc. Your thoughts?
Yes, the U.S. dollar, and quite a few strategists have been saying, well, what might happen is that it could be negative for the dollar, that trade spats initially, but if it does develop into a full-scale trade war, then normally you then see flights to safety, risk off, and those flows, as a rule, benefit the dollar. Capital flows back to the U.S., flight capital, and that, I think, will see the dollar rise in DXY or trade-weighted basket terms. So I think the emerging market currencies will be hit in that situation, along with the other G10 major currencies. So definitely appreciation in the trade-weighted dollar exchange rate is a headwind for emerging markets. We've seen that, but it's still our central case. We're not going to see an all-out trade war. I think there'd be strong protests from business within the United States acting to constrain the administration if it seems hell-bent on escalating tariffs.
All right, Jeff, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Jeff Lewis talking about the situation with regards to the US and China on trade tariffs. Just want to pull up the stock Cipla because there was news from Cogensis that their Indore unit has been classified as VAI, or voluntary action indicated. So that means that, they will not possibly need a re-inspection from the US FDA for that particular unit. The US FDA is probably going to be okay with the remediation conducted by the company, and hence will be okay with them to carry on operations without a re-inspection. Just to give you a little bit of a background, this particular unit was inspected in April of 2018, and it was issued 3 observations at that point in time by the US FDA. So it seems as though it is a little bit of a positive which is coming in for Cipla. That means that the US FDA would be okay with the remediation. And actually, it's positive also because, Prashant, there was a fear that it could have probably escalated to a warning letter or something else. So that's actually a bit of a relief. Need to take a break now, but we'll discuss the implications of the US tariff on China on the metal space with Manisha.